Hello everybody, welcome back. Let's have a look at Bitcoin. We'll have to have a little think about the overall market as well, but we'll start with Bitcoin and then we'll end with traditional markets because I know no one's really particularly bothered about that, but you do have to think about traditional markets, to be honest, as we've been talking about the everything bounce coming to an end, and we've got to look at how that might happen or if there's going to be continuation. So for Bitcoin, we'll start on I suppose the cleanest chart I've got, because obviously my charts might be a little messy for most people. I swear, honestly, all these things that I put on the charts are relevant. You'll get used to it if you follow the channel anyway. But outside of that, we can just go quickly to TradingView and have a quick look at just this simple formation, or two formations really, and what these two mean for price action. So if we take away all moving averages, Ichimoku Cloud, Bollinger Bands, and actually have nothing here but price, what we see is that we did have a descending channel and we have broken out of that. So a breakout of a descending channel is actually pretty bullish, and you'd be looking, to be honest with you, you would be looking for a retest of at least this kind of toppy zone. So this is the summer lows of last summer, that would be. So we just go back in time. You don't really need me to draw this in. I'm sure this is etched into everybody's mind, but it's around 28 to 30,000. So we'll just go straight through and just go to 30. You can see that that's more or less straight through the price action here, and it's almost towards the top of the channel. So we can extend this over here just for fun, and as much as it might not seem as though this is possible, I think it is kind of probably the most likely scenario based on Bitcoin's chart on its own. If we take away all the other things like traditional markets and international events, like there's a lot of talk of Nancy Pelosi going to Taiwan. It's going to suddenly dump markets, and to be honest with you, markets are always looking for an excuse to move. This is one of the most stupidest thing about markets. It's one of the things that attracted me to crypto, back in the olden days anyways, that crypto largely was devoid of these kind of trading environments, and now obviously it's now we can see that it's been sucked so much into the system that it behaves almost exactly like every other. In fact, it is. It's more or less an amplifier of the broader traditional market environment. But before, it never used to be like that, and that's why I used to love it. It used to be charts used to be so much more tradable, whereas now everybody's on the back foot, waiting for somebody to fart in the wrong place and dump the markets, or maybe fart in the right place and cause a pump. But if we just look at the chart itself, just based on these two formations, a larger, more aggressive descending channel which has broken, which honestly does offer a move up towards the summer lows, and then that would be the larger move, and that's probably the most likely. If you're thinking about if we're going to break out or down and what's the biggest move in the short term, we might come back down to this channel, maybe testing as low as maybe 20,000. That is possible, but the bigger picture would be from here to here. So we're talking from today forward, roughly today forward. It's a little more than that because I just measured the candle top there, but it's around it's roughly about another 30% move to the up for Bitcoin from this level. And if we think about that, what that would be to the down, we're talking maybe a 10-12% move to the down. Obviously altcoins probably not going to be happy with a further move down as we approach this 40% dominance level, but I mean that is, from what I can see and what I expect, the larger move from this exact level would be to the up, although in the short-term timeframes, which we'll have a look in a moment, we might be looking for a little sweep lower, maybe as low as 20,000 or just above, although I would be surprised if we did come down that low, but it still would be reasonably okay. So on the short-term timeframes, I've got all my mess on the charts, okay, so just bear with me on here. So we've got a golden cross. This is your second golden cross that we've received, and most of the time, and again, I'm not going to backtest this for the people that don't believe me, but most of the time a second golden cross is more valid on a short-term time frame than the first. We did have a death cross followed by a golden cross, so really I would be looking for this one to have a bit more follow through, and again moving us up to that summer lows 28 to 30,000 and see where we go from there. I'm not saying that we get rejected from there, but it would appear pretty obvious that we would get rejected from there. So if we're looking for this, we're looking to retest the 200 exponential on this one. That is currently at 22,500. That's where I'll be looking for the retest. Now, if that, for whatever reason, breaks, it starts to look a little weaker, and we can entertain very realistically the idea of, further supports being tagged. The most obvious one would be this one around 21,005, 21,006, and that is your sideways channel. You can call it accumulation, or you can call it redistribution, depending on which way we break, but it's basically a sideways channel, and that was the top of the channel. This obviously the lows around 19, we don't need to think about that for now, but the top of the channel obviously as well supported by a 200 simple moving average on the 4 hourly. So just put all these numbers in your head. We've got 200 exponential, which is more or less horizontal for the moment on the 4 hourly, 22,500. Let's take this to a daily now. Let's have a look at supports around the daily. So we'll just extend this, get rid of all this, draw a little dot there for no reason, and let's have a little look a bit closer. So what else is around here? 22,500 is your 21 exponential on the daily, also your 20 simple moving average, Bollinger Band center basically. So we've got a lot of confluence around that 22,500 area, suggesting if we did come down to this level again, they're moving up as well. So the momentum on the higher term time frame still presents relatively good. And again, daily term time frames are higher term time frames for the most part. For me, they're pretty standard. So this is like neutral. This is my favorite trading chart time zone, dailies. But we can obviously go a lot higher, and we will. But yeah, 22,500 backed up here by some strong moving averages, and I would expect if we do come down to revisit that, that's where bouncy bounce should start to take place. It doesn't have to, but it should. Again, we've got 200 exponential on the 4 hourly, 20 and 21 on the daily, all at that exact level. If we look at the RSI, we do have a very subtle moving bearish divergence, but we also have more or less a trend taking place here on the RSI, and you'll be looking for this one to bounce around this level as well. So again, trends can form on RSIs, on MACDs, and all of these things that, in fact, formations and trends on momentum oscillators like these, to be honest with you, work out just as well as formations on price action. So we do have a current uptrend of momentum. I would expect that to maintain. We also have moving averages backing us up on 4 hourly and daily. So let's have a think about what's going on the higher term time frames. That's right, let's step it up a notch. So on the 3-day, we don't see any real problems at all. The momentum on these higher term time frames is still really strong, and this, despite the descending trend line being your moving average, your 20 exponential, Bollinger Band center on the 3-day, despite that, the momentum is still moving to the up. And again, just like we've seen on the daily, we've got a trend of momentum building, looking for a potential retest ever so slightly lower than where we are right now. That's all pretty good. And if we think about those magical support numbers that we were talking about, your 10 exponential moving average on the 3-day, which again is a moving average of significance. If we're looking to start an uptrend, you normally would start to begin that uptrend on a 10 exponential and wait for it to start to cross back over higher term time frame moving averages to gain strength of trend. We'll be looking for a retest of that. You've got a 7 simple, 10 exponential, all coming in at 22,500. So 22,500 is a real strong area of support. Maybe a little lower could be wicked down to, but closures generally for today and maybe for the rest of this week, I would really be hoping to see this area maintain its support, because it's backed up by so much on 4 hourly, daily, and now on the 3-day. And again, the momentum on these higher term time frames are still to the up, so that suggests further upside, generally speaking. Now, if we go to the weekly, things start to look a little bit undecided. You've got your 200 simple moving average, which is more or less where we're being held on right now. So this is 200, simple moving average. So your 200 weekly, the thing, the meme, everyone's 200 weekly, 200 weekly. Well, there we are. We're on it right now. We've seen before that it didn't really mean a great deal. We did come up to retest it here. Okay, fair enough. A nice fine rejection from it over there, closing below it here. Undecided over here, and now we're sort of being supported on it right now. We're only Tuesday, so I don't hold a great deal of weight on it actually anymore. For me, it's always about the exponentials, and I would consider the exponential on Bitcoin more important. And if we think about where we want to break to get these bigger moves up, we've got 24,000 as your 10 exponential. We've got a 200 exponential coming in still at around 25,000. Nice psychological number for everybody to hold onto. And then we've got what I consider the more appropriate areas for resistance, which is 26,007 or 26,800, which is where we had this big wick down to, a very good reaction from it over there, and then a massive breakdown. So 26,800, I would say, would be the major area of resistance, and if we break through that, then the summer lows almost certainly get tagged, probably quite quickly afterwards as well. And again, momentum on the weekly, no problems on it at all, to be honest with you. Not extended, money coming in. The MACD obviously still way in the oversold territory. Oh my god, I used the word oversold. I mean, remember, it's just a momentum oscillator. The more aggressive Bitcoin is, or the more money it goes in, obviously this is overbought and this is obviously oversold, but what we're really looking at is the histograms, and the histogram is ticking to the up. We don't have a bullish cross, we're still well in bearish territory. We have to respect the overall direction is certainly down, but looks pretty good. So like I say, the higher term time frames don't really show any real warning signals or any reason to be massively concerned, and the lower term time frames from the daily and lower, all of these apart from the weekly, are giving us that 22,500 area for a strong area of support, and maybe that's where we bounce from, moving us up to oops, not my microphone there. Moving us up to the previous summer lows, so 28, 29 to 30, basically. So let's just quickly move on to traditional markets, because we have to think about this. We'll get off this silly Nasdaq and we'll go on to a bit more of a substantial Nasdaq. So we've been talking about the everything bounce, and the everything bounce has been pretty decent. We've all benefited from that, I hope, provided you watch and like and subscribe and put the notification bells on, because we did buy the lows on stocks with the idea of moving up to a significant high, and the high first of all is going to be in this descending triangle. So we're still within it, and we've still got a little room to run on this one, if of course you got the ball through it. I took 50% of all my stocks and indexes off the table just before the FOMC meeting, so I missed out on a little bit more gain. The idea is I'm trying to buy a hot tub, really. That's what I want. So it's not me. The kids have seen it in B&Q. They want it. I thought, well, why the hell not? So I had to take some chips off the table, but also it is the right thing to do. You buy low and you sell high. You're in a bearish formation over here, so you have to respect that. Anything that you get given in these environments, you should really try and take as much as you can. But I still have 50% riding, and I'm going to see if we get rejected from around here. I expect that we probably will, and if that is the case, we're talking only a small amount of moves, so another 5, less than 5, 4%, 3%. It's going to diminish every day by what looks like about 0.5%, and so yeah, we're still okay as far as this trend is concerned, but we're in a bearish formation looking for a rejection around there. If we don't get rejection, then we are pumping. We are probably going to pump quite hard on traditional markets, and I would imagine that we pump all the way up to 15,000 on the Nasdaq, and that's where we would still maintain a lower high structure. So still definitely a downtrend on this one, but we could move up another 14-15% to that level, and if that gets broken, well, that's an uptrend, really. That's the start of the continuation of the uptrend on the Nasdaq, which is always giving. It's an up-only chart, let's face it, it's an up-only chart. Now, personally, on the Nasdaq, I do obviously have to respect the downtrend on this. We all understand by now the nature of the economic environment to which we're trying to trade within. It makes it quite hard, really, for spot traders, for the most part, to make money in a downtrend, although we've proven on the channel that it could be pretty significant when you get it right, and we've certainly got it right. But I would much prefer a rejection around this level. Even if we got a fake out to this level, I would still prefer the downtrend to take place, because I don't want to be holding anything outside of crypto for a prolonged period of time. The only reason I hold crypto for a prolonged period of time is the enormous amounts of staking that you can get, the fast turnaround that you can get, and the fact that I trade mostly with Bitcoin and Bitcoin pairs. So whatever Bitcoin I have is my balance. So I trade Bitcoin into altcoins, and I just focus on how many Bitcoins I've got rather than what it's worth. Really, that's my. But when it comes to trading real money and holding on to stocks and indexes and whatever, yeah, you don't have that luxury. You kind of have to be be careful. So I would be preferring a downtrend to continue on traditional markets until the Fed pivot, and start to sort out their monetary policy. I know that they're having a little bit of a time off period now, which is why I think partially why markets are still pumping, because they don't have the ongoing threat of constant rate hikes and stuff like that. But we still have to respect the environment, which is not favourable for equities and or anything, to be honest with you. There's a lot going on in the world, and we have to understand and respect that for what it is. But yeah, I mean, there is definitely criteria for this to be fulfilled into an uptrend and actually break out from here. But for the moment, we're still in this giant consolidation, as is Bitcoin, and Bitcoin will continue to be in that as well, until we start to make higher highs and higher lows on a weekly. We don't need to look at that, but you know what I mean. So just finishing this off, I know it's a long video. Dixie finding support now on the 50 exponential moving average on the daily, and also this horizontal area of significance, 105. So this does honestly feel like a bit of a bouncy time for Dixie. We are moving a tiny bit today. It's pretty much unchanged, but a little bit. It's the bottom of the Bollinger on the daily. There's a lot of reason to think that we do get a bounce from here. Maybe this bounce takes us up to 106, maybe 106.6, maybe the Bollinger Band Center 107, and we will see if this continues to cool off really in what is a consolidation. But we've got hidden bullish divergence taking place here on the RSI. Sorry, that's not even hidden, is it? That's yes, it is. It is hidden, and so we should expect a bit of a bounce on the daily. We just move this to an even smaller term time frame. What do we see? Yeah, I mean, we're just getting support on here, and we've got regular bullish divergence now as well on the 4 hourly. So this does offer a very realistic possibility of moving back up to probably at least 106.5 and maybe a little higher. But it's cooling off and it's downtrending, so that would favour further upside across the board after this little bounce has taken place on the Dixie. And well, Bitcoin dominance is what it is. You all know this now, should be echoing within your head. The closer we get to 40% dominance, the more careful you should be, or the smaller, the less exposure you should have to altcoins at this level. I know this is looking bearish. We've got on the shorter term time frames, being the daily basically, we have got ourselves a short signal on the Itchy Cloud. We've got below all major moving averages. We've got a death cross on the daily as well. That it is what it is. For me personally, when you take all the noise off the chart, the idea is relatively simple. The closer we get to this level, the more devastating it would be to be in an altcoin position if the market turns sour. So there's always the idea that things are different this time, and the things are always different. Things are never exactly the same. But if you looked at this chart and recognized, and you've been around in the market when dominance has been this low, and the reactions that you get when you hit 40% dominance, I trade based on risk and reward, and the risk, gets higher and higher and higher the lower you go on the dominance chart if you're holding onto altcoins. And so there's definitely plenty of opportunity for altcoins. We've shown that just even throughout the last 6, 7, 8 weeks as well. There's plenty of opportunity. We've been pretty low. We've had a great time, and there could still be more opportunities. There's always some altcoins that shine outside of other ones with charts which are different to all the others. But for the most part, altcoins more or less trend as one, and one altcoin chart looks very much like another altcoin chart. They all look the same, but occasionally some things stand out, like Matic, for instance, and most recently Jasmine gave us a quick decent trade. There will be always things like that turn up on charts and go, I'm slightly different. But for the most part, it is a matter of risk versus reward, and the lower you go to this level here, the higher the risk. These little moves over here don't seem dramatic, but this was your May crash over here. Altcoins went down, some of them 80%, 70-80% in a 24-hour period when you hit that level. The same sort of things occur, generally speaking, when you hit these levels. And so whether you're bullish or bearish, the better position to be in would be a Bitcoin position as we approach 40% dominance. But that's a sweeping statement. Like I said, there's always 1 or 2 or 5 or whatever altcoins which will move in the face of the overall market. Sometimes that's a fundamental reason, sometimes it's based on the TA, sometimes it's both. But it is a sweeping statement, and it should be seen as a risky area for altcoins to be around here. Anyway, that'll do for now. It's quite a long video, but yeah, I'll leave it with you there. I hope you have a nice day. Doing a Patreon live stream tonight if you want to join that. Obviously, you've got to sign up for it, but it's pretty cheap, to be honest. £7.50 a month, 2 live streams a week, usually about 2 hours long. You just ask me whatever you want. Otherwise, Telegram and Discord is completely free. I'm mostly present for the most part around those levels. It is summer holidays at the moment, so kids are almost always around. Not today though, hence the long video. Hopefully a little bit more informative than usual. And yeah, hope you have a nice day. Take it easy, everyone.